The support targets we spoke of on yesterday's analysis ended up being the very lifeline for the support the asset faced today. Momentum may be suggesting a slight continuation to that downside, but we must be careful for the macroeconomic data to be released tomorrow. Let's pull up these charts for a true edge. Welcome back to the channel on this Taco Tuesday. This is ARCa. Let's dive into ticker symbol FNGR. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol FNGR here, and this is the manipulation chart. And as you can see, damn it, yes, we got another shot of manipulation today. So that was actually just one iteration here, and price action, of course, ended up doing its little dance, right? So interesting to see how price action reacts the moment we get any of these strikes of manipulation. Now, please bear in mind that these strikes of manipulation are factored within about 6 to 7. I can't give away the conditions, right? But I can tell you that these are 6 to 7 different metrics that need to all line up perfectly in order for price action or in order for the algorithm to fire off a strike of manipulation, right? So it's just to tell you the truth, is just when we had all this manipulation here, it was very interesting that those conditions met so often, and they're very difficult to meet, right? So we got another strike of manipulation today, and price action started actually diminishing, right? Sorry for my dog team. He's actually a little upset of the trick-or-treaters outside, which, by the way, we need to make this quick because I need to get to trick-or-treating with my little boy. All right, so let's try to get this done in a short and sweet amount of time, right? So, yes, we got the manipulation signal here, and price action has reflected that bottom side of 580 that we spoke of as a support from yesterday's analysis. So, nice that we were able to see it. But, oh, and sorry about this, right? This is, of course, 31. There we go. All right, so, and what the heck is going on here? And that was a 30. All right, there we go. So, right. So now let's go ahead and see what the what price action has to say in the following charts, right? So yeah, just like we said yesterday, right? We've noticed here that we've had a few iterations to where we get some 3 white soldiers and we get a pullback, maybe 2 candle pullback before a continuation to that upside. And in specific here, we actually had another 3 white soldiers with 2 candles of pullback, arguably 3 with a green one, right? And then it continued to that upside. So, and of course, this was a huge outlier, right? Because this was the capybara, whatever. All right. So anyway, let's go ahead and touch down with the charts following into this, right? So this was the magical chart where we said that this could be the zone of support. I favored the 580 support, right? But the thing is that I'm not sure if this was broader market influence, because I don't know if you noticed the volatility in the markets today. It was so damn choppy. It was everywhere. So, and I expect that to be the case tomorrow. So in what we're doing now is that we're going to try to prepare for the scenario to where we do get a shock to the downside, because if Fed Chair Powell comes in here and says, you know what, we're going to hike again, and we're going to do this at a 25 bip or a 25 basis point increase, then the markets will probably capitulate, right? Because it looks like the markets have been pricing in a potential pause, but not really a pause. It's just we're going to skip this iteration, and then we're going to wait for another one, because in respects to what they said last time for higher for longer. So if they are respecting higher for longer, that means that there could be a couple months in between every iteration where they do increase rates or where they do hike the rates, right? So I guess we will see. But we're getting a little bit of an indication here for a further downside, simply stated by this bearish engulfing here printed in the 4-hour chart. Okay, so that is now telling me that at least the least support that we can face could be around 574. And if there is a further downside to look at, then I think there is a really relevant area here at around 570, and I guess we can use that too. So we'll keep it in there for just for our discretion here. But team, if they really do capitulate the markets tomorrow, I'm saying if they, as in the Fed, if they do capitulate the markets tomorrow, then I wouldn't see why the asset wouldn't reach back down to 540 to 553. Okay, and that's a very particular zone because that is the golden pocket. Okay, now if we do face that golden pocket it does have the thrust here to send price action right back up. Okay, so we would have to be very careful over what's happening next. Okay, team. So the reason why I'm saying this is because, yes, sometimes FNGR has the power to decouple from the broader markets, but it's very hard for FNGR to decouple from everything when everything immediately sells off in a split second, right? So quick capitulation event, FNGR tends to follow in within that price action too, right? I mean, everything would, with the exception of a few things, of course. And yeah, so we already have that bottom side support here at 574. And I want to remind you here that, of course, that 574 is a range of 577 to 574 being the top side of the right angled broadening descending wedge, right? This wedge here. And this is, we did get a touch of the support one time, which is how we were able to determine that we were going to continue onwards and upwards. So in this case here, yeah, I'm just saying that if we do have that potential to touch back down, so be it. And we should see how price action will react to that coming into tomorrow. Okay, team, let's just be very careful here. There's no way that I can actually pretend which way we're going to go based on the macroeconomic data tomorrow. Okay, but again, 580 to 575 is that support that I preferred, and it feels like this could be a good area for us to support because of the mid band here on the linear regression channel. Okay, so that mid band would essentially work as a support zone, but if we do fail it with a 2-hour candle print, meaning that this candle or the next one, printing below the area of particularly 573. Let me see. I'm gonna get it started there. Tight as I could. Yeah, 573. If we print below 573, if we close the candle below 573, then that belongs to the bears, and we would potentially set ourselves up for a capitulation event. Okay, so I'm going to mark it off right there. So yeah, that would then introduce price action for a pretty aggressive downside. And I mean, if we were to face the very bottom side of this area here, I guess, yeah, maybe 530. And if that 530 sounds familiar, that's just because we just spoke about it, right? At least 540, right? 540 to around 553. So we shall see, though, team. These are just the preparations that we're doing in case the Federal Reserve capitulates the market. And if they don't, then price action may very well combat the resistance level that we've been talking about, right? This tiny little gap here, which is it's criminal. It's super difficult for us to get over that. But that would be the condition here, team. We're going to have to wait for the Fed and see what in the crap they're trying to do to us, and we shall see. But another important factor here is that we got the monthly and bi-monthly closures today, and I would like to present this, right? The reason why I have price action all the way out here is because you can't see volume when I put it here, right? You can barely see it. So I need to put it all the way here so you can see how volume reacts. And please notice here, this is this candle that I'm hovering over. That's 12.06 million or 03, right? This one's 21.39 million. This one is 36.125 million, and this one here is 53.856 million. As you can see, price action increasing alongside increasing volume. That is a bullish statement overall. Okay, so this is looking very good for the asset, and I do think that it could be on a continuation to the upside in an overall perspective. Of course, we're going to face some serious implications here in the immediate short term. But we did talk about this. This was the initial 3 white soldiers that we put up last or 2 months ago, right? And I said that we would likely continue on to the upside and print green on the next one. So we did. very close to turning. I mean, it would turn red below this 518. But yeah, we still printed green and we still printed a new higher high from this iteration here, right? So it is breaking market structure still. We shall see how this reacts, okay, team? So yeah, the immediate short-term timeframes are aside. This is really not going to matter too much because of what's going to happen with the Fed. But yeah, we are being suggested a downside here, which is validating our current thesis of facing a downside support to that 575, 574 area, potentially 573 with the risk of breaking beneath that. Okay, team. So if we do break beneath 573 and close a bi-hourly iteration below that, price action can lead to the downside. All right, team, I think I got to leave it here. I really got to get out to trick or treat with my son. Really appreciate everybody for sticking around. Yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good night and a safe Halloween, and I'll catch you at the bell mañana. Adios. Yeah.